and post-election has seen the return of some major transactions like Tishman Speyer's refinance of Rockefeller Center. Bill Rudin's with us. Rudin Management co-executive chairman joins us on set this morning. Great to have you back. Bill, welcome.
Happy holidays. Just to be clear, my children, Samantha and Michael, run the business. I just show up every once in a while and watch them do their thing.
We've been talking about the recovery in office specifically. The headline last week was that tenants are scrambling. And you came armed with some numbers, right?
I did come on with some numbers. I think the demise of office and New York City have been greatly exaggerated. I've been on this show. I was here 2 years ago, almost to the day when I came over, when the mayor announced his City of Yes program that was passed last couple of weeks ago to increase conversions of obsolete office buildings to residential. But this 2024, highest volume of leasing activity since 2019. We'll hit 40 million or close to 40 million. 4 million feet were leased in November. We had the second largest lease signed this year in midsummer with Blackstone. They took over 1 million feet. Bloomberg took 1 million feet renewal on Lexington and took another 1 million feet renewal on 3rd Avenue. NYU just took a 1.1 million from Vornado at 77 Broadway. And so you're seeing a whole diversification of the market in a positive way. Tech companies are back in play. They've been out of the market.
Are they back? I mean, because that's I was, Meta, Amazon. What we kept getting was they're either delaying or they're not going to fulfill what had been their previous commitments and the like. So what are we seeing there?
Apple just took space. Amazon just took 300,000 feet on the west side. They're rumored to be looking for another big block of space on the east side. So the tech companies are in. Financial service, lawyers, accountants have been growing. We have a building in Times Square that we're over 65% leased with Remy Cointreau, a law firm from Atlanta, an accounting firm from the city. So it's a whole.
So we're through this, Bill? I think the bad times are over, the worries about remote work and the fact that, we're still only, 50, 60% in terms of where we were?
No, we're at 90% midweek in our buildings, and I think that's a trend.
Tuesday, Wednesday, Thursday.
Yeah, but
they got to take the space, right?
Monday's getting better. Friday is slow. So the definition of work has changed, but in the Class B is definitely an issue, but that's where this conversion concept is going to move forward. It's probably about 20 million feet over the next 4 or 5 years. We have a building right around the corner, 55 Broad, I talked about before. We just started leasing with Larry Silverstein and Metro Lofts. We're at 10% leased at over $100 a foot.
Capital's going to be there for those kinds of conversions and you're going to be able to generate a real return. I mean, some of them are more difficult than others. I know that.
No question about it. But we've got several buildings in our portfolio that we're seriously looking at conversions. We're doing the underwriting right now. There is capital. The CNBC market is back. The banks are coming back into the market. So it's. You're laughing at me, but
Bill, it pays to be optimistic. Yeah. There's no doubt.
Although
Carl agrees with me.
We go back and forth on New York Booster Club, but there was that journal piece a couple of weeks ago about how old line real estate legends were selling something.
Well, we did sell some properties because we looked at the future and we determined that only owning certain class of buildings that need a significant amount of capital are not the way to go. We can deploy that capital into a conversion that makes sense. So we're going to be working on a couple of things and looking at other opportunities. So that's, I think, a positive thing. I think, as I said before, probably 20 million feet of apartments, office buildings will be converted. We need more housing. The city is housing shorted. I was talking to you before about you're looking for an apartment. So it's in order for us to grow our economy, we need to be able to provide the housing inventory that at all levels, market rate, middle income, affordable.